Okay. Hello. Good morning, good day, good afternoon, good evening, and good night. Wherever you are and whichever part of the world you are in right now, we are greeting you all the way from Maryland. Of course, near some myself, I'm in Maryland, but our chairperson, oh, wait a minute, she's in Maryland too. She came to visit. So all three of us are in Maryland, but in different locations. Welcome, everybody. We also have our CFO coming on in a few seconds. We have our host, Nia Sol, on, and we have our chairperson as well online right now. Those of you who are out there, I hope you're staying safe with this COVID-19. The pandemic is still raging. It hasn't slowed down yet. So make sure you stay masked up. Make sure you use that sanitizer. Keep yourselves clean, and just make sure that whenever you're not away from home, make sure you use that sanitizer so that whatever part of your face you touch, they say it goes through your nose, your mouth, your eyes, and I don't know what other orifice it goes through. So let's stay safe, and let's also remind one another, if we see our friends without a mask, to politely remind them to say, keep your mask on. We talk every Sunday, different topics. We have different guests coming on every Sunday. Sometimes we don't have any guests but ourselves, like this week. So if any of you are listening right now, we would like to invite you to join us. We are going to be talking about taxes, Taxes, taxes as in state tax, IRS, Uncle Sam. As all of you know, 15th of April was the deadline, right, for taxes in the United States of America. Today is the 18th, so if you haven't filed like me, you're late. But guess what? We do have our tax expert here who will tell me what the ramifications are for my not filing when I'm supposed to file. Ladies and gentlemen, welcome to our Sunday program. Yes, sir?
Thank you, Sylvia. Thank you, and welcome on board, Rev Solange. Thank you to our chairperson. And of course, as you heard, Asonglefac Nkemleke is a long, unpronounceable name, where it depends on where you come from. If you come from the BLM, you will know how to say it very well. And there's a lady from Bali who has always done it right. So I appreciate all that. That being said, I just want her to laugh because I know she likes laughing. She's always giving us the smiles. That said, April 18 is the 108th day of the year 2021 on the Gregorian calendar. It is the 16th Sunday of the 17th week of the year. We should also note that today is the 30th day of spring. So Sylvia, I know you like spring because of the beauty, but we are waiting. We still have 64 days before summer. So don't worry, the very hot time will come. Remember, from June 21st, it will be summer. This third Sunday of April is, you want to hear that? Well, go fly a kite day. So there's always something happening on different days. So after this, you go out and fly some kites. Get the grandkids around you, let them fly some kites, but don't let them go out of your fence because, okay, and I see the Reverend Solange showing us the mask. You need to wear a mask.
In the house.
You need to wear a mask if you have to go outside. That's right. Okay. On this day in 1955, the first large-scale African, Asian, or Afro-Asian conference kicked off in Bandung, West Java, that is in Indonesia. Ever since, it came to be known as the Bandung Conference. The meeting brought together 29 countries that had among them already at that time 1.5 billion people. The world population is growing every day, isn't it? The conference's stated aims were to promote Afro-Asian economic and cultural cooperation and to oppose colonialism and neocolonialism by any nation. It marked the start of what came to be known as the non-aligned movement. This, of course, has since gone under, but at that time, the Cold War was heating up between the West and the East, not the geographical West or East, but the political appellation. On this day in 2018, coming close to home, a tiny kingdom in Southern Africa made history by changing the colonial name of Swaziland to the native kingdom name of Eswatini. The kingdom is a landlocked country in Southern Africa, bordered by Mozambique and South Africa. We surely remember from last week's program that April is Financial Literacy Month, or as someone has just told me, quote, a chance to reflect on the state of our personal finances and an opportunity to improve those finances one step at a time. Last week, our attention was captivated by a discussion that laid out the need to acquire such skills as would allow us to be financially literate. Not that we're illiterate financially, though, just that we have knowledge about our finances, but are not savvy enough to use the knowledge acquired to create wealth, earn a living, and pass on the wealth we make to our inheritance or to our other generations, really, to other generations. The discussion was an invitation to make money by working, earning it, investing it wisely, and going on to live off what we earned or made or invested. Unfortunately, those efforts are in most countries interfered with and by something called taxes. Sylvia spelled it out, T-A-X-E-S. Don't confuse it with Texas, where our chairperson lives almost permanently, because there is taxes, then there is taxes, I-S, and then Texas, the state. But economists and financial experts tell us that taxes are a necessary evil, not their word, just my own interpretation. A necessary evil, they say, because governments that impose the taxes use the money collected to provide communal services that individuals and communities cannot on their own collect and use judiciously and equitably. We further gather from such thinking that in economic terms, taxation refers or transfers wealth from households or businesses to the government, and that this has effects that can both increase and reduce economic growth and economic welfare. Consequently, they tell us, and as we shall certainly hear in this discussion, taxation is a highly debated topic. Yes, because it is as good for you as it is bad for him or her on the other side, opposite you. Well, Albert Einstein tells us, and we quote, the hardest thing in the world to understand is the income tax. That is, taxes on the money that you make. From ancient times, Plato told us, quote, when there is an income tax, the just man will pay more and the unjust will pay less on the same amount of income. And an anonymous says, that was a writer who didn't give his or her name, told us, a fine is a tax for doing something wrong. A tax is a fine for doing something right. I didn't know that until I saw this quote. A tax is doing something wrong, while a tax is a fine for doing something right. Whatever the old and the not so old tell us, one thing is worth keeping in mind. Rich or poor, we must all contribute to the common purse so that services can be provided for the general welfare as for both the good, the bad, and the ugly. Whether they stand to gain or not, the good, the bad, and the ugly, either they pay or they don't pay. And of course, they also benefit from the services that are provided therefrom. Am I right or am I backing a wrong theory? That is a question for you and for our tax experts in the house, not particularly Reverend Solange, but those others that will join us to discuss this topic. So join the discussion and let us talk about taxes, taxation, and the need to pay or not to pay. What are the consequences, if any, for not paying one's taxes? What are the rewards, if any, for paying one's fair share? Well, our chairperson is available to guide us into this discussion and further on introduce the person that should not be introduced because she is our CFO, Chief Financial Officer. So, Reverend Pam, over to you.
Thank you so much, Nia Song. You know, you are talking about a Bali woman. I just want to remind you that the Bali people are the ones that named you guys Bangwa. So you need to be careful when you talk about this Bali woman. But thank you so much. I'm still in your neighborhood. last Sunday, your sun was shining so much in my face that I decided to turn off my camera today. I didn't want the silver spring sun to blind me, even though it's not that strong today. And our president remembered that I'm still in your zip code. So Rev Solange is the one in the other Texas that could be confused with taxes. And she needs no introduction, but I can, for the benefit of our first-time viewers, I would like for her to introduce herself, and then you can pose the question. But I want to welcome all our viewers again. You know, and Rev Solange is not a guest; she's our Chief Financial Officer. But we're going to have other people watch this show for the first time, so we would like for her to take a moment and introduce herself, and then you, the anchors, can pose. I know somebody said, I think the president said the tax deadline has passed, but I think they extended it, but I'll leave that up to the tax accountant to tell us the truth, because yeah. All right, so Rev Solange, you are very welcome. Please introduce yourself to our first-time viewers. We are streaming live on Facebook.
Whew. Good afternoon, good morning, good evening, wherever you may be. This is Solange Gabicce, Reverend Solange, as Reverend Pam calls me. I'm an accountant specialized in income taxes, actually, whether it's income tax, individual, corporate tax, you name it, nonprofit, etc., etc. And I'll be answering your questions today. So on that note, because I really want to give time for people to ask, as Niasen said, tax is a very complicated area of our of our existence, or of financial well-being. No matter what we're doing, they said there are two things that are certain, that's death and taxes, which means you must pay taxes one way or another. Even sometimes when you think you've paid up for your home, you say, oh my God, I'm mortgage free, but you're not tax free, because you still have to pay property taxes. And of course, if you're working, you have to pay income taxes. If you're self-employed, a business person, you have to pay corporate taxes. You have to pay payroll taxes, and the list goes on and on. Even when you're working out of the country, as an American citizen, you still have to pay some kind of taxes. So today I'm open to questions, and I hope I'll be able to answer to the best of my ability, God willing. So over to you, Reverend Pam or Niasen, or our president, Prophetess Sylvia.
Yes, ma'am. Yes, ma'am. With regards to, you just mentioned a statement that I was actually going to pose a question to you. When people work abroad, like you said, some people have dual citizenship. They're American plus whatever other country that they have, or they're just American and working in a foreign country because that's what they choose to do. So in that country, let's say, for example, if I go to Africa, the African country will tax me, correct, on the money that I'm making. Then if I have to expatriate my money or move my money from Timbuktu to here, the US government, the Treasury, and the state also tax me. Is that correct?
Not necessarily. You can exempt some part of your income from being taxed to avoid double taxation. If you earn money from overseas, there's some forms that you will have to fill out. In order to get all this exemption, we have a form called 2555. You have the easy and you have the long form. You complete that form, you state how many days you spent overseas working and how many days you spent in the United States. And based on that, they're going to calculate your income that is taxable right here to avoid you being taxed twice. There are some other companies working in some parts of the world, and there are quite a good number of them that they have what they call tax-free. They do not tax their citizens. But as a United States citizen, you're going to bring that money here. It was tax exempt in that country, but it's not totally, completely tax exempt here. You have to fill certain forms so the government or whatever, or whoever is your accountant can figure out what part of that money, what portion is taxable.
So when they're overseas, do they pay both state and federal taxes?
It depends if, okay, let me say, for example, say you're working, you do not really pay both states because where you're working overseas, remember, maybe it's a country that do not really do income taxes. So you're going to get the bulk of your money paid maybe in your account in the United States. So if your state is one of those states that collect state taxes, they'll have to figure that out based on the number of days that you spend overseas and the number of days that you spend in the United States.
Supposing you have a 5 to 10 year contract overseas. You barely come home. Maybe you come home for a week, like a vacation to visit family. And of course, Monday you have to be back at work. How does that tabulate? Does that still count as somebody having to still pay taxes because you've been in the country for 2-3 days?
No, if you're in the country for 2-3 days, then your income may be totally tax exempt because it's like you're living in a foreign country. You're not in the United States. So if you spend most of your time overseas and you get taxed in that country, remember, if you're not taxed in that country, you may still have to pay taxes here, even if you spend just 2-3 days in the United States. But if you were taxed in that country to avoid double taxation, and you can prove that you were taxed in that country, and you spend most of your time over there, then you may not have to pay taxes here. And I'm using the word may and that because, as you well know, tax laws, rules, they change all the time.
Yes, they do.
So I don't want to get locked in a box and they're like, oh, she said you don't have to pay taxes. No, no. I'm choosing my words very, very carefully.
Good for
I
you.
hear you. I hear you. Nelson, can I ask one more question? Then I hand her over back to you.
Okay.
Regarding the houses.
Go ahead. Yeah, go ahead.
Regarding real estate, especially your main abode, your home, not the rental property. I know rental property comes in a different category altogether. But let's say one buys a house here, or you've had a house, and then of course you want to leave. You don't want to sell your home, but you may leave somebody in the house, you may not. But you're not living here. You're living overseas, but the house is still living here, with or without somebody in there. Are you still obligated to pay those taxes for that house?
100% yes. That house is located in the United States. In a county, you're going to pay the county taxes. You're going to pay the school taxes. Whatever taxes are there, where your home or your house is located. Yes, ma'am. You're going to pay.
Thank you. Nelson?
Thank you, Sylvia, and thank you, Reverend Solange. From what I hear, it looks like a tax is a mandatory thing that everybody or those who have to pay must pay. Am I right, Solange?
Yes, one way or another.
Okay, and back on the continent of Africa, many people are farmers, or they live off the soil. They don't work. So how do governments in those countries levy taxes on the common folk? People not in the civil service.
I'm not an expert on taxes in Africa, but from the little I know, there's some countries that still find a way to levy taxes on the cocoa or coffee farmers and all that. I remember way back, as a child growing up in Cameroon, they used to actually stop people on the road and ask them to show some kind of
Calais.
That you've paid taxes or something. So
it was in most African countries.
Yes, they have a way of imposing these taxes or assessing these taxes and making their citizens to pay. So it depends on different countries. So as I say, I'm not an expert on different countries in Africa.
Yeah. As I said in my reflection, taxes are collected for the purpose of providing services to the entire community. But then in Western countries, everything is well structured and you pay the cut off or they deduct the taxes and we see what the money goes for. But out there in Africa in particular, I know, growing up in Cameroon and visiting Nigeria and Chad, I know that the money is collected, but the services are hardly ever there. So should the people then be asking the government, taxing the government to do what they're supposed to do with the money they collect? This is just a general question.
I know, maybe technically no, but talk to the leaders of this country, because that's what we call corruption. And we're not going to go into that today because it's a real different topic. They collect these taxes, they don't put them to use. Like, let me say, for instance, in some countries, every 5-10 miles, you have a tollway and you pay toll. But if you look at the roads, you begin to wonder, what are they collecting these tolls for? The roads are not being maintained. They are not fixed. Bridges are collapsing, but they're collecting toll fee or toll taxes. They're not putting it to use, to proper use. So what do you say? It depends on the government. So the people of that country, the citizens, have to hold the government accountable. I don't know how. They just have to find a way. I'm not going to advocate for non-payment. I'm a tax accountant, so I will never say, oh, don't pay your taxes because they're not using your money properly. I will always say pay and then find a way to hold the government or your county accountable for your tax dollars or francs, whatever.
Yeah, that being said, at the beginning, Reverend Pam mentioned the fact that in the United States, April 15 is tax declaration, or you must declare your taxes by April 15.
The president did. The president did.
Oh, the president did. Okay, the president did. Now, April 15 is past 3 days now. Are we in default? Those of us who have not yet declared, Reverend Solange?
No, fortunately, this year and only this year, the tax deadline was extended to April 15 because of the pandemic.
April
and in
15?
some states, yes, it was extended to May. It's not April 15 as it's always been. Texas being double fortunate because of the Texas storm. We can go until the 15th of June before we file our taxes or file extensions. But for partnerships, you must have filed your extension by the 15th of March. And for corporations, you file an extension by the 15th of April. But you have till the 15th of May and 15th of June for Texas to file your income taxes.
If you're a limited liability company, when are you supposed to, or when will you declare?
Limited liability companies, like most corporations, have to file by March 15th. But this year, they moved it to April 15th, where you have to file an extension.
Okay.
Yeah.
All right, sounds good. With regards to back taxes, let's say somebody hasn't paid taxes since, I'll just pick a year, 2012.
Okay, that's going back, what, 8 years?
Yes, 8 years. I mean, I just threw a number out there.
9 years.
Okay, somebody hasn't filed taxes 2012, then they filed 2015, then 2016 they don't, 2017 they don't, 2018 they file. And this year they file. In other words, it's not like consistently filing every year. Some years are being missed. What are the ramifications for that, or what are the repercussions for somebody who doesn't consistently or continuously file every year?
Repeat offenders.
No, first, first I want to find out why have they been skipping. The first question will be why, because I know there's an income threshold where you may choose not to file. Did that person make less than $400 a year?
Yeah, maybe that person made let me say maybe is it 12,000, 10,000 in those years, but then other years maybe they made 15 when they filed, and then again they make 10,000, and then they 20. In other words, the income is not consistent in every year.
Yeah, in my opinion, if you make $10,000 a year, file your taxes. Even if you're not going to pay back, maybe you're single and your standard deduction is already way over $10,000, which means if you file your taxes, you're not going to pay taxes. You may actually get some refund back if you're over 25 years old and made $10,000. Why will you get a refund back? Because you qualify for unincome tax credit because you're over 25 and did not make enough money. So by not filing, you're actually shortchanging yourself. So my advice would be for anyone not to skip any tax year. Sometimes you file taxes just for compliance. To say, I file taxes. Like we have some taxes, I'm going to go into that now, like most franchise tax in many states, you file them for compliance because if you don't make over $1 million, you're not paying franchise tax. So you file maybe a no tax due franchise tax because you below that threshold. But you have to file for compliance. In the state of Texas, if you fail to file your franchise tax, guess what happens? They forfeit your corporation. So you're no longer legal to operate. So that's one of those taxes where it's for compliance.
Yeah, you just mentioned franchise tax there. Are there other forms of taxes that we ought to know personally, for example, I hear of direct and indirect taxes. What is the difference between direct and indirect?
Those things really exist in the United States. All taxes are direct. Oh, I'm just kidding. Okay, maybe, I mean, direct and indirect taxes are really not used frequently, really, not anymore. Direct taxes, how will I say it? It's like you go, you work, they tax you, you're taxed directly. Let me just be very, very literal about the whole thing. Indirect taxes is when you, maybe you do something, there's tax already added to that, to the value of that thing. And you purchase that thing, and there's taxes also. You're paying taxes indirectly. I'm just trying to make it very simple.
Yes.
Okay, let's say indirect taxes. Most states, I think the whole of the United States, we have sales tax, right?
Yeah.
Sales tax is both direct and indirect because it's added to whatever you buy. Taxes are already added to it.
So I go to the supermarket or to the food store, and I get my vegetables, I get my apples.
Vegetables, foodstuffs are tax exempt, foodstuff and medicine.
Oh,
when you
okay.
take your receipt from the supermarket, look at it, you see that some items have not been taxed. Food, medicines, and all that.
Oh, okay.
Unless they are cooked food.
Okay.
Like if you go somewhere in Houston, we have somewhere where they fry fish and all that. If you buy your fish fresh, take it home, no tax. If you have them fry it for you, then it's taxable.
Because value has been added to it.
Mm-hmm.
So they tax me because they added value to what I'm buying. What if I went to, say, a clothing store and bought some clothes?
They're taxable. Clothes are taxable.
Oh, okay. The tax is included in the price I pay.
No, most of the time they take it at the cash register. Yes, included in the price. So if something is $20, you're going to end up paying maybe $21.
Okay. Yeah, as Reverend Solange, I've also heard talk of inheritance tax. What is this inheritance tax? When I'm working, I'm paying taxes and saving something for the rainy day. If I happen to go to my maker and leave something behind for my kids, why should they also, if inheritance means that they have to tax that for my kids, why?
Inheritance tax is a very sticky area. Sometimes the dead person has to pay the taxes before they die, or when your kids inherit, or when they inherit that property, then they will pay tax. But it's not that harsh because there's some exemptions. It's not like they're taxing the whole thing. It's like gift taxes. When you give someone a gift, either the person giving the gift has to pay the taxes, or the person receiving the gift has to pay taxes. But they exempt you up to a certain amount of money that is exempted before you pay taxes and whatever else is there.
So if I went to Zambia, for example, and the government gave me a gift, a beautiful, costly gift, and I bring it into the United States, will I have to declare that as some income I made?
No, that's not income, that's a gift. But then if it's not adding to your existing assets in the United States, it's a gift. Nobody's, I mean, if that's the case, then so many people will be taxed for so many things that they bring from overseas. That's not the gift we're talking about. Most of the gift taxes are related to uncles, brothers, sisters, parents giving gifts to their children or to their relatives or whoever, and not paying taxes on those gifts. The kids have to pay, or whoever has to pay taxes on that gift, but not for all, not for the total amount.
Yeah.
So I say some of these topics are so broad that every year they tweak it one way or the other. There was a time when you can exempt up to $25,000 worth of gifts before they are taxable.
Reverend Pam, do you have a question for Solange? For
Yeah, of course. But Madam President, I think Ni asked that question because he's trying to get a gift from Zambia. That's why he's asking the question. That's an indirect way of saying.
I hear him. I know why he was asking, and I have his number right about now.
Yeah, it's an indirect way of saying I need a gift from Zambia. They have a lot of copper there, so.
They have copper, we have copper, we have emeralds, we have diamonds, we have gold, we have everyone, I think the only thing I haven't seen in Zambia is tantalum, but every other mineral is in Zambia.
Yeah. So
if I asked the question, it was not so much because I wanted a gift, but because Zambia is one of my favorite countries in Africa. And yesterday I was visiting a friend who said, is President Kaunda still alive? I said yes, and I showed him the picture because I have his picture on my phone.
Alive?
He was dancing at his birthday. I said, Kenneth
God.
Kaunda was my favorite African president. So the name Zambia stuck with me since yesterday. So it was not because...
I don't care how you defend it. I'm saying you selected Zambia because you are expecting Sylvia to send you a gift from Zambia. That's fine. It's okay, Niasong.
It will be my pleasure.
Thank you.
It will be my pleasure.
Like Rev Solange said, Niasong, don't go meet your maker and let your children inherit any taxes. Make sure you pay all the taxes before you give them the gift. But all jokes aside, Rev Solange, you said something that is a bit concerning because, yes, Texas was hit hard, the Arctic blast. We all suffered it. And a lot of people just knew the tax deadline was extended, but a lot of people did not know that they had to file a tax extension. So what is your advice to those organizations that did not file an extension? And I mean, maybe they're planning on filing the taxes by May 15. How can they avoid the penalties?
Extension was for individuals, income.
Yeah, but how would people know? I'm talking about, you know, everybody was affected by the Arctic blast in Texas, including businesses.
Actually, it was on the news, and if you're a taxpayer, you're going to ask questions from your tax preparer or tax accountant or whoever. When am I supposed to file my taxes this year? I was affected by the pandemic. Is the government saying anything about taxes? So many questions were asked. It was on the news and all that. So I'm sure some people missed it. That's true. But
okay, let me ask you a question. Somebody from another state, I won't say which state, told me that the IRS was forgiving penalties for late filings last year. Is that true?
But you have to, it's not automatic. You have to write and explain why you're late. Yeah.
Even though they themselves were affected by the pandemic, people still need to write and explain.
Yeah, I mean, half of the time their offices, they were not picking up their phones and all that. So those are some of the things. If they have a penalty, you could say, you know what, I couldn't get through to someone. I was affected by the pandemic. Some people didn't have lights. Some people were sick. Some people were in the hospital for a month. They were not even reading their mails. A lot of things happened in 2020. So you have to just make
so they only give it to people who request it specifically. Okay.
If you're fine, if you receive it better. Yeah, if you do receive it better.
One other question I have is, if you are a business owner, is it better for you to file your personal income tax separately, or your LLC, or you should file as one entity? What's your advice? Because some people say when you file separately is double taxation. Others said no. So please just help those who have those questions.
Okay, this is it. Limited liability company has 3 classifications or so. When you're operating a business as an LLC, especially if it's a single member LLC, you can file your tax return on what we call a Schedule C, which means it's together with your personal taxes. However, if you have 2 or more people on your LLC, you can file as a partnership or as a corporation using Form 1120 or 1065. Okay, let me explain a little bit more. 1065 means you're in partnership with someone else. 1120 means it's a corporation, maybe shareholders and all that. It depends on your tax situation. You may choose to file your LLC on a Schedule C because that's going to benefit you. And sometimes you have no choice but to file that way. If you have not made the election, you have to fill out a form called Form 8332 to elect to be taxed as a corporation if you have an LLC. Until you make that election, The only way you can file your LLC will be on a Schedule C or Form 1065 for multiple members LLC.
Okay, thank you.
So it all depends. If you want to file as a corporation, make that election. If not, you're going to file it as a Schedule C or 1065.
Okay, thank you so much. Back to you, Niason.
Yeah. Okay. That being said, let us go now to find out about declaring your taxes or not declaring your taxes. When you go to declare your taxes, you provide the materials to the tax accountant or whoever. What if he puts information that is not pertinent or that is not really related to whatever you are doing? Should you contest that in front of him or let IRS know that your tax preparer put things in your file that are not supposed to be there? Reverend Solange?
Sorry, I was really distracted. Somebody was.
Yes. Okay. We're talking taxes and we're looking forward to getting the answers to our questions and having you out there ask questions, please, because if you are out there and you don't know much about taxes and you have the opportunity unpaid for here that Africa Online is bringing to you, then tomorrow you start biting your finger and saying, oh, I wish I had listened to that discussion. So join us and ask questions to our tax accountant so that we move forward together. Reverend Solange?
Go ahead, I'm waiting.
Yeah, I said if your tax preparer put things in your declaration or what, I don't know the technical language, and then the IRS, the IRS is maybe angry at you or following you to find out what happened. What should you tell the IRS?
But the tax preparer cannot put things on your tax form 1040 or Schedule C. You have to give your tax preparer the figures, the info to put on your tax return. Because anything on your tax return is your responsibility, not your tax preparer. Because you signed on it. Once you signed on it, it means you gave your tax preparer that information.
As a follow-up, you live in Texas, I live in Maryland. Can I send my taxes to you in Texas to do for me rather than looking for the next door neighbor to do them for me?
Yeah, it depends. I'm licensed in all 50 states to prepare income taxes. I have clients from all over the United States. So you can do that if you want to. But I'm sure in Maryland, and I have a lot of family members over there, they're very good accountants over there in Maryland. Instead of trying to crisscross your paperwork, I'm sure, you can, but I can prepare your taxes. I prepare taxes for my family members that are up there in Maryland and DC.
Okay. I just wanted that clear because some people may be wondering, should I send to my cousin who is in New York or to my niece who is in Oklahoma?
Oh, they can do that. If that cousin in New York, if that cousin in New Jersey, wherever, Maryland, it has the software or can prepare taxes in that state, yes, they can do that. Because sometimes people are more comfortable with their family members, whereas some people are not. So,
and I understand that people also do their own taxes.
Oh yeah, that's called self-prepared.
Oh, okay.
If you have a good tax knowledge, yeah, you can prepare your taxes.
Okay.
But I advise against relying, if you're going to prepare your taxes, make sure you have a good knowledge of doing that, especially if your taxes are a bit complicated. This is why I'm saying this. I have a lot of clients, and I'm not going to mention the name of any software because I don't want to get. I have clients that have gone to the Office Depot or wherever online and bought some of this software that said, do your own taxes. They prepare their taxes using this software. And a lot of mistakes. Why? Because most of this software is question and answer. Did you live in this? Yes. Did you make this? Yeah. No. Yes. No. Yes. No. At the end of it, they work out your taxes for you. No tax knowledge. Now you have this all worked out tax prepared for you and you submit it to Internal Revenue. Sometimes some people lose $1,000, $2,000. Because why? They didn't want to go and pay a tax accountant like myself to do it for them. They thought they could do it themselves and save money, and instead they lose money. Most of those tax software out there except the professional ones are very limited. But if your case, if you have a very simple 10 W-2, have a property somewhere, yeah, you can do that. But if it's a bit complicated, I really advise you to look for a tax professional. I've had people that have been audited by the IRS, and the IRS will actually state there that get a tax professional to do your taxes.
Yeah, if I asked that question, it was because, I mean, I've heard people complain about how they did their own taxes and got audited, as I think that's the word. I think they get audited. And
exactly.
I don't know about the software thing, but I know you don't want to talk about software, but why should we, if we have professionals, not go to the professionals and want to cut the grass, wreck it, and then mold it by ourselves?
Simple, Mr. Assam. Two things. It's cheaper to buy a software for $100 and do it yourself than pay a tax accountant $300, $400, $500 or whatever. Number one, you're trying to cut down on costs, but penny wise, pound foolish. Because you're going to do that, and you're going to make a lot of mistakes. But some of them is good. Don't get me wrong. I'm not condemning you, telling you that, oh, those software. No, some of them are very good, especially if you have some knowledge of what you're doing. You're going to do good with those software. And then first, they're trying to cut costs. Number two is because they feel that, you know what, this thing looks so easy, I can do it myself.
And I've also heard about, yeah, Sylvia, did you have a question to ask?
No.
Okay, let me go ahead. Yeah, I've also heard about joint filing, husband and wife, or in the single filing. Tell us the difference. I mean, is it that if, just answer the question.
Let me explain this. This is an area where a lot of people, they come to my office and they're confused between single and head of household.
Yes.
Married filing joint, that is explained, that is husband and wife living together, they file together.
Okay.
Or even if you come to state, you want to file together, you can do that too. That's joint tax return. So that's very simple. Why a lot of people get confused is, should I file as single or as head of household? And I would tell most of them, you're going to file as single. They say, no, but I'm head of my household. I said, that's not what the IRS means. When they say head of household, to qualify as head of household, you must have a dependent. Whether it's your mother, father, your child, someone must be dependent on you living in the same household for over 6 months of the year. You qualify as head of household. If you're single, and of course you're the head of your household because you pay all the bills and all that, that does not qualify you as head of household. You are single. And of course, single means single. You don't have no dependents, you don't have no wife, no husband, whatever, you're single. So for tax purposes, head of household does not mean that you're not a head. It just means that you don't have anyone that is your dependent.
And for those of us from other shores living in the United States, so what is advantage? I mean, what is best? File as head of household or file as single?
Now, once you're married, you cannot file as head of household. Married couples must file as married filing joint. Head of household is if you're separated, divorced, or if you're single with a child or any other dependent, then you're head of household. But once you're married, both of you live under the same roof, you file married filing joint.
Now I know
or
that.
Married filing separately.
Separately, okay.
Married filing separately is when couples decide to do married filing separately. So that's a different category altogether. It's not single, it's not head of household. It's called married filing separately. You agree, both of you are married, but I want to file mine, you want to file mine. But the downside to that is that when you have children that are still maybe 17 and below, when you do married filing separately, you do not qualify for education credit, earned income credit. You lose out on a lot of credits.
Wow.
So yeah, married filing separately is not the best way to go, unless you're making a lot of money, both of you making a lot of money, and you want to itemize separately, then you can do that. But if you're making maybe, or your wife is making 40,000 a year, I see it all the time, then you're making maybe another 40 or 50, and you think that if you do that, then you're going to get more money. You know, you're going to lose out because both of you are not going to qualify for unincomes tax credit. You're not going to qualify. Your children are in college, you will not get education credit. You're not getting either.
Still talking about, still talking about people living in the diaspora, filing, let's say, as head of household, when your grandmother or your dad or your mom are actually living on the continent and you're only sending remittances to them. How do you go around that?
Well, you're not head of household. You're not head of household, you're single. You're single, let me put it this way. If your mom or dad comes to live with you maybe 6 months, 7 months out of the year, yeah, you can claim her as head of household because she lived with you most of the year. But if your parents are somewhere in another continent and you send money to them, that does not qualify you as head of household now.
Okay. So what about gifts? When you make gifts, very often in African communities, as far as I know, receipts are never kept for those things. So how do you account for the gifts that you make?
Gifts to where? Where do you make these gifts? Gifts to where, Mr. Nkemleke?
Well, let's say to relations out in the
who?
continent.
Gifts to who?
To your people living in the continent, cousins, nephews, and so on.
They're not tax deductible.
I don't know.
If you want your gift to be tax deductible, donate through a 501c3 company, charitable organization.
Donate to Africa Online.
Exactly. Those are tax deductible. But if it's, I mean, all of us, one way or the other, we sponsor relatives overseas and all that. Those monies we send over there, they are not tax deductible.
Yeah,
give to Goodwill, Salvation Army, and your church is here. For those of us who go to church in the United States, you give money to your church, yes, they are all tax deductible.
Yeah, I think my question should have been directed at deductible. What's the word deductible? What does it mean? What does
deductible?
It imply? Yeah,
tax deductible means you can actually deduct it from your.
Okay, all right. Reverend Pam, you have questions for CFO?
Yeah, thank you. I want to thank Rev Solange. I call her Rev Solange. I actually call her Mama, but because we put her name on the announcements as Rev Solange, that's why she's labeled that way today. But thank you so much for breaking it down. That head of household and being single, that is really confusing to a lot of people because I'm glad you are breaking it down because a lot of people feel like, okay, they're not married, so they're the head of their households. Which, meanwhile, the IRS doesn't consider that way. So I am glad you are really breaking it down. You don't know how many people that you have helped, but at the top of the hour, would like for you to take a minute. Actually, we can even do it now. I have some questions, but I want you to tell people how they can reach you, not your personal cell phone, please, because you run a successful tax shop. The name of the business is very easy, it's tax shop. But I want you to take a minute and tell, I know you're not hurting for business, but hey, we want people to see, since you are licensed in all 50 states, and we know you are the best in the business, if they want to reach you, how can they reach you? Either your email or your website or business line. If you can take a moment and tell our viewers, how to get in touch with the tax shop, that would be great, Rev Solange.
Okay, thank you very much, Reverend Pam. As I said, I'm Solange Gabicce. I've been a tax accountant for 28 years. I run a successful accounting practice specialized in taxation, located here in the Greater Houston area. My trade name is Tax Shop, very easy, which means when you come to my office, you will find everything that there is and all the answers to your tax problems. Tax Shop, TAXSHOP, for those of us that like shopping. We have a website, www.taxshop.org. We couldn't find .com when we wanted it. .org. And my email, you can reach me at Trinity Tax. See, my business is owned by God the Father, the Son, and the Holy Spirit. So it's called Trinity Accounting and Tax Services. My email is trinitytax@yahoo.com or taxshop1@gmail.com. And my phone number, my office phone number is 556-0002. Thank you.
Okay, and also please take a moment to type in the chat box, the website and the phone number and your email, so that the thousands of people that are going to be watching this show on Facebook and YouTube, because it's going to be uploaded to YouTube later on, they will still be able to reach you. And please indicate there that you are licensed in all 50 states. That would be awesome. Yeah. I am really happy about this, and hopefully, you know, some mistakes that were made in the past by our viewers, they will not repeat themselves because of what you've done. Last year you were on here, you broke it down. We actually did a sequel. So I always tell people that it's expensive to be cheap. So those who try to do their own taxes, there are some people that, you know, get it right, but those who don't know what they are doing and they lose more money because they were trying to save $300, that's, you know, that's a shame. Yeah, so it's a good thing that people are doing this. My question has to do with, I don't know if it's tax assessment or appraisal, because you could live in a neighborhood, and a neighborhood just across the street from you, their homeowners association taxes is different, it's way, way higher than that of yours. Or you buy your house completely, but you are still paying like $300 or $500 a month in taxes. Could you shed some light on that and how we can even save money on property taxes, you know, if you want to go there?
Yeah, I'll just touch on that a little bit. There are some experts that's their expertise, property taxes.
Real estate, yeah.
I'm going to say it from, yes. With property taxes is by locality.
Okay.
We may be a mile apart, but you're in a different locality. For example, where I am is a clear example. When I get out of my home and I just have to walk, not quite 2 minutes, I'm already in Harris County, but I'm in Fort Bend. I'm right on the border of Fort Bend County and Harris County. So people in Harris County, they have a different tax code from me in Fort Bend County. I'm in Katy ISD, and some of my neighbors are in Fort Bend ISD, and some are in Waller ISD. So it all depends on your locality. That's how property taxes are assessed. And also the value of your property. Sometimes when you make, okay, like people come to my office, they want to deduct the amount they spent on remodeling their property. So I spent $20,000 last year to fix my home. And I tell them, you know, whatever you spend to fix your home, unless it was energy related, if you bought new windows to save on energy, lights, whatever, they have a certain amount of money that they will give you credit for. Other than that, whatever money you spend to remodel your home, it's not tax deductible, because it is assumed that when you sell that property, that remodeling adds to the value of your property. So when you sell your property, you're going to make profit from that. And it'll be based on what the value of your property is at that time. The only way to save on property taxes, if there's any, when you buy property, file for what we call homestead. I'm sure you've heard of homestead exemptions.
Yes.
Some of us have. What is homestead exemptions? Homestead means, let's say your property is 100,000. Maybe there's a 20% homestead in your locality. And I say that because it varies. So what they will do is, instead of taxing you on $100,000, when you file your homestead exemptions, they're only going to tax you on $80,000, which will reduce your property tax. Also, if God blesses you and you get to the age of 65 years old, in most locality, your property taxes are less to, I mean, it's so little. It's like some of us are paying every day to get, because where I live, the property taxes are really high, but you cannot get exemption until you're 65 years old. And also, if you're disabled, you can apply and get your property taxes. And there's some also reduction for veterans. So call your, I almost said Fort Bend County Assessment Office. So call your property tax assessment office. They will give you a long list of how you can reduce your property taxes. Thanks.
You know what you're saying is, so go ahead, Nelson.
Okay, I was going to just say, now that there is pandemic, is that considered a disability when
No,
you become
yes,
a victim? When
No.
people are sick of COVID, when people are sick of COVID and they are no longer working,
Yes,
what
so
becomes
please,
of
we
their
are
property?
on social media. So that's very disability. Okay, if you're sick, okay, actually, like my county, they send out mails. You have it one day somehow, but this is how it goes. They send out mails saying if you're a homeowner and you've been disproportionately affected by the pandemic and you cannot meet up with your property taxes, you have to apply and let them know. Then they'll see what they can do. Maybe they're not going to exempt you from property taxes. They'll be like, okay, you were supposed to pay in April. We'll give you 6 months, but you're still going to pay property taxes. And also remember, if you were affected, okay, we're not going to use COVID, like Texas had a storm. There's casualty and theft. I've had a lot come to my office. They were affected by Texas storm. The FEMA will give you a code. And with that code, if you had leaking roof, pipe busted, and you name it, a whole lot of things happened to property owners when we had the Texas storm. There's a code given by FEMA. Take that code, and your tax accountant will have that code. Even if you don't take the code, most people don't know that code. Go to your tax accountant and tell them you were affected by the Texas storm, or maybe in Oklahoma, wherever it happened, and you want to claim some tax break because you suffered this casualty. They're going to do that for you, and that's going to help you too a little bit. There's so many little.
Information is really power. Information is very important because in 2017, I was affected by the hurricane. Was the Harvey?
Harvey, yeah.
My roof was affected, but I didn't even know I could claim. Of course, FEMA came, and of course, they didn't help me. I mean, we all know why. But anyway, I'm just saying, if I knew this information, I would have gotten that code and claim because we know to replace a roof in Houston, average $30,000. My roof was affected, not the whole roof, but with not knowing that information, I did not request a code or request assistance because they don't automatically give it to you. And that's one of the reasons why I like the information we share here. Hopefully, some of our people that were affected by the Texas storm, this time I really can't claim anything. I mean, my water bill went off like high, like 10 times. I don't know if I can claim anything with that, but this I don't have a leak. So, but for those who were affected, hopefully, they'll be able to, contact FEMA for a code and request some kind of tax break. Again, the Bible says, my people perish for lack of knowledge. Without knowing these things, we don't know what we're entitled to because the government is not just going to give it to you. They'll give
No, they will not just give it to you. Every catastrophe that was suffered, there is a tax break called casualty. Even if they break into your home, if you have a break-in, and insurance companies sometimes will compensate. Let's say they break into my house. There are some things that I collect. I'm not going to say we're on social media.
They're not going to break into your house. Just say
no, I'm just saying.
Somebody's house.
And they steal some of those my collections, right? And what I do is when I file my taxes, I'm going to say there was a break-in. Okay, fair enough. The insurance covers contents, home contents. They'll ask you how much money did the insurance and company compensate you. Maybe the thing I have is worth $10,000, say, and maybe the insurance only gave me $5,000 because that was the evaluation. So what do? I file that form and I said I suffered loss of $10,000. Insurance company gave me only $5,000. So now I'm going to get a tax break of the other $5,000 that I was not compensated for. So, and as Reverend Palm says, you have to ask. It's not just going to be given to you at all.
Okay. Yeah, when we come back, we'll be asking about people who refuse to pay or tax evasion and so on. And we're also finding out about rates. Why do the tax rates vary so much and why is the difference so big? So Reverend Solange, while we take a sip of water and listen to Africa Online Anthem, let us be thinking about what to say in those lines. I'll see you at the other side.
Okay.
Africans for Africa, Africans, Africans for Africa.
I need my glasses.
Africans, Africans for Africa, Africans, Africans for Africa, Africans, Africans for Africa. Africans have many bright ideas. If only you let us share. If you really want to know my history, please come, sit down, listen to my story. God gave us a wisdom. He guides our footsteps, makes us shine and transform. Hey, as one people, with so many cultures, yet indeed we are one. Stand up, Africans, let's save Africa. Let us all unite behind Africa Online Media Corporation. Stand up, Africans, let's save Africa. It's time to come together, promote awareness, progress, and solution. Hey. Africans, Africans for Africa, Africans, Africans for Africa, Africans, Africans for Africa. All Africans can rally for a common cause, to believe without judgment in what our brother does, to identify and resolve our challenges, to allow each other's ideas without regard to standards. As one people with so many cultures, yes indeed we are one. Stand up, Africans, for Africa. Let us solve all the problems plaguing our continent. Stand up, Africans, let's save Africa. Let us empower Africans in and out of Africa. Stand up, Africans, for Africa. Africa Online Media Corporation, that's a good way to start. Stand up, Africans, let's save Africa. They have all the resources we need to benefit our society. Oh. Education for everyone. If we believe prosperity for Africans, if we believe medical facilitation for Africans, if we believe stand up, Africa, yes, for Africa. Africa Online Media Corporation, that's a good way to start. Stand up, Africans, let's save Africa. Africa is the cradle of civilization, the motherland. Stand up, Africans, for Africa. We were enslaved not because we were weak, but because of our hospitality. Stand up, Africans, let's save Africa. Jump on the Africa Online Miracle Jet. Don't be left behind. Stand up, Africans, for Africa. Together we shall succeed. Together we will win. Stand up, Africans, let's save Africa. We are writing our own story, the truth, and we shall tell it to the world. Stand up, Africans, for Africa. No more lies. Africans own Africa.
Yes, indeed. Normalize Africans on Africa. Next week, we are going to be talking about sexual assault, and we're going to have an expert here. Our ambassador is actually conducting a graduation today, and our president is one of those graduating. So she pressed her way in for the first half of the show. She's headed to our graduation, and we want to congratulate them for their achievement. So we're going to be talking about sexual assault. If you are an emergency room doctor out there and you would like to be one of our guests next Sunday, please inbox us at info@africaonlinetv.org. We're going to have an expert on sexual assault, but we're also looking for an ER physician to talk to us about the medical implications of that or what they see in the emergency room as far as sexual assault victims. So that's what we're going to be talking about next Sunday. We have somebody who's done a lot of work on that, but we also want an ER physician to weigh in. Okay, Nia-san, over to you. Rev Solange, you are muted.
Thank you very much, Madam Chair. And before we went on the break, I was telling Reverend Solange that when we come back, we'll have something to say or something to hear about people who fail to pay their taxes. I think they also call it evasion. So what happens to these people? Does the IRS ever find them and nail them?
Yeah. Tax evasion is illegal. Tax evasion is so very illegal that we know some stories in this country where criminals have gotten away with so many things, but when it came to tax, they got them. So that's something you don't want to get into, trying to evade taxation.
Let me ask you a real quick question in line with what Nia-san just asked. What I mean, for our viewers, because I know what this is, but what's the difference between tax avoidance and tax evasion?
That's a difficult question. Okay, and I'm going to choose my words very carefully.
Please do.
Tax avoidance is when you do whatever you can to the best of your ability. Or let me put it that way, you use the loopholes of the law to pay less taxes.
But you do it legally.
Legally, it's
That's
legal.
not illegal. Tax
it's
avoidance.
Not illegal. Tax avoidance is not illegal. It's immoral. It's not right because you're cheating others. You're looking for all the loopholes that there is to pay less taxes. That's avoiding taxes. Whereas tax evasion is illegal, like you're supposed to pay this tax and you don't want to pay taxes. That is tax evasion. Tax avoidance will not get you into trouble unless you get audited and you have to produce all the receipts and all that. But tax evasion will get you into trouble with the law. So that's just the basic difference. Yeah.
Good. And now that you brought receipts, remember in the past, people had to keep all their physical receipts. Some of us don't like paper. We do everything electronic. So are those receipts still that critical? Where people...
Yeah, let me tell you what I advise people in my office. I tell them, I said, most of these receipts, they fade off. So you can take a picture of some of the receipts and print them out, because if not, it will fade and you won't be able to, if you show that receipt to someone auditing your records, they'll be like, okay, I cannot read this, or this is not legible enough. Receipts are still critical. Cancel checks. If you can, do most of your major purchases through the bank, because that's proof that you actually spend that money, bought that thing, maybe it's office equipment or whatever. So try and do that through the bank.
Or online, with
online, whichever way you can really keep it. Since you say you want to keep electronic records, that's good. But just make sure that you have proper records.
But unfortunately, sometimes, when you get groceries,
that's where I say, you know what, take a picture of the grocery receipts. Grocery receipts, they fade out so fast. Take a picture of those grocery receipts and keep them. Grocery receipts, why are you going to be with other things like grocery now? Most groceries have nothing to do with taxes, because food and medicine, as I said, they're not taxable. That's not even going to come up. No. they're going to audit you based on, you said, okay, I bought office equipment for so and so amount of money. Okay, show me receipts. I paid rents. Show me a receipt or lease from your landlord. Or another area they look at is mileage. I mean, I'm not going to talk about tax auditing today. There are areas that you have to watch out for, like, people that say, oh, I drove 30,000 miles. Keep a mileage log. There are apps now. Go online, download one of those mileage apps on your phone, so you can track your mileage. If you have one of those, if you're one of those independent contractors that drives from pillar to post, to go visit a client or something like that, keep a mileage log, because that could be asked.
But the reason why I asked about that grocery, because that's part of most people's expenses. If you are deducting that.
No, the government does not pay you they don't pay for your groceries at all. That is, unless you're a caterer. Okay. If you're in the catering business or restaurant business, yes, then you must keep those receipts, because the one you made, oh, I bought food for $10,000 and I cooked them, I baked them, and I sold them for what? Okay, so they may be like, okay, give us proof that you spent this amount of money to buy food supplies. But if you're not a caterer, you don't have anything to do with grocery receipts and IRS.
Okay, great. Yeah.
Yeah, the other thing that is on my mind is the tax rate, which seems to vary so much, so that, as they said already before, taxes are unfair because some people pay more, some people pay less. But why are the rates, especially here in the United States, so varied, from 0 to 50% or whatever? I don't know.
Okay, let me say something about tax rate. Because on something like I have everybody calling me. I'm trying to turn them out. Tax rates, they are basic. About how many tax rates? I would say up to about 6 tax percentage or tax rate. It starts from 10%, 12%, 22, 24, 32, 35, and so on. 10% tax rate, that's like the basic. If you're not making over, and it also depends on your filing status. Are you single? Are you head of household? Are you married, filing joint? Some of the information I'm giving you, you can actually go to irs.gov and you will find it there, www.irs.gov, and they will give you all that information. Maybe if you're single and you didn't make anything over $10,000, your tax rate is something like 10%. If you're married, maybe up to $20,000, or if you're head of household, maybe up to $20,000, up to $15,000. So it varies. And then you have I'm going to go right to where you talk about 32 and 35% tax bracket. You're talking about people that are making over $500,000 to get to that very high tax bracket. If not, you're going to dangle between 10%, 12%, 22, 24%, maybe 25%. But to go all the way to 32, 35, you must be making a lot of money.
Okay.
To go to get to that tax bracket. Yes.
Okay. So what should we tell our brothers and sisters, especially here in the United States, who want to play tricks and get back refunds?
Okay, if they want to play tricks, then what they're playing is tax avoidance, right?
Okay.
That's the legal way to do it. I can say it on social media, because even I'm sure if you go to irs.gov and ask them what is tax avoidance, they're not going to tell you to avoid taxes. They're going to say, well, if you can study and know the loophole of the law, you're doing it, it's legal. But don't try to evade taxes, because you get into trouble with the law. So if they know all the loopholes, what they need to deduct, like I was talking about, Reverend Pam said, my proof period for lack of knowledge. If you have knowledge about a lot of things that you can deduct on your income tax, you will get a refund. There are some things that people don't even know that that are tax deductible, and they leave it on the table. And that brings me back when I was talking about some of the software that are out there. Buy this software for $100, but they're not going to tell you all those things. They're just going to ask you yes, no, and then plug it in. Bam, you have a 1040, and you submit to the Internal Revenue Service. But if you go to a professional, they will ask you questions as they're preparing your taxes. I do that. I said, did you do this? Do you have any of this? Can you show me this? Can you prove this? And at the end of the day, they'll be like, oh, I didn't even know I could deduct this. I said, yeah, it's legal. You can deduct it. So if they can figure out all these deductions, and believe me, there's so many of them, and they're very legal.
So why is it immoral then? Because I mean, there are a lot of people that have paid taxes that they did not need to pay, and you know,
I don't like to use the word that is immoral because it's legal. Because what they're saying is that immoral means people smarter than most people.
but that's not be immoral. I mean,
it's not. But they just feel like, oh, why should you be knowing all this when other people don't know about it?
What is stopping them from going to learn? Like you said, let them go on irs.gov and look it up for themselves, because you know people work hard to earn their money.
A lot of people don't like going to the IRS website. And believe me, I'm telling you, if you go to the IRS website, there's a lot of information there. Fair enough, there are some terminologies that will throw you off and you wouldn't understand them. But all you need to do is, if you don't understand something, ask your tax accountant. That, you know what, I went to the IRS website and I saw this. What does it mean? And he or she will explain it to you.
But it doesn't even make sense, because if you want to know much about taxes, that's the place to go. So
Yeah.
if you don't want to go there, then you're going to be ignorant and you're going to lose money, because like you say, they will not come to tell you that, oh, this is what you can do, this is what you can do. They will just
No, they will not tell you that. And sometimes when you go to irs.gov, when you go to that search part of it, just type in, is this deductible? Is my grocery deductible?
Oh, sorry, it's irs.gov, not irs.org.
No, .gov.
Oh, okay.
www.irs.gov. Let me type it in. There's a lot of information there. www.irs.gov.
Okay, I think yeah. Let me see if I can delete this. I don't know if I can delete this. Okay. All right, Nyasom, back to you.
Yeah, thank you. The other question, well, not really a question, but just a reflection, a call for reflection, is about auditing. When and how does IRS get to audit somebody? And yeah,
sometimes it's random selection.
Okay.
Because they've audited people that made $20,000, and it's like, oh, you were just randomly selected.
Okay.
And sometimes there's some triggers on your tax return. Okay, let's say somebody made $50,000 a year, and they itemize up to $40,000 a year. That's a red flag.
Oh my God.
That would trigger an audit.
Yeah.
Yes. So there are some red flags, and I'm very good at advising people. Like some people come to my office, they want me to push, and I'll tell you, you know what? Show me the proof. Let's see, because I can push this for you. And believe me, I know how to do it if I want to do it. But you get into trouble and you're going to sign. I'm not a magician. I'm not going to make up in data for you. Whatever you want me to put in your tax return, just write it down. And at the bottom of that paper, sign. Because I'm working based on the information you provided me. And I will advise you that if you know you don't have proof of this, don't do it, because it will trigger an audit. And when it does that, don't call my number. So audit is either randomly selected or there's a red flag on your tax return. There's something that audit.
Somebody told me once, I think 2 years ago, that they were audited year one. 3 years later, they were still audited. Was wondering why.
Okay, this is what happened. Okay, let me tell you something.
Person they're looking at.
Yes. Okay, I think today is funny. I needed this laughter. Okay. The thing, what people should understand is that when IRS says we're going to audit your 2019, right?
Yeah.
They're not going to just audit that year.
Okay.
The IRS never, not never, most of the time they'll audit 2 years. You audit 2019 and 2020, or they audit 2019 and 2018. So the person now will feel like I've been audited twice.
Yeah.
And sometimes when they're not satisfied, maybe, yeah, there's just unfortunate circumstances where you happen to be audited this year and 2-3 years later, you get randomly selected again for an audit. So it could happen. Yeah. But just know that when the IRS calls for an audit for 1 year, sometimes they may ask you for another year, maybe in the following year or the year past.
I think that's what the person did not understand.
Yeah.
So he was complaining. I said, well, I don't know anything about taxes. He said, well, it's just a discussion because
either it was unfortunately selected twice, randomly selected twice, or they had asked for his 2 years tax return.
So you can send the link to this show to that person.
Yeah, that's right.
I let them know it has nothing to do with their skin color or their country of origin.
No, not at all. Not at all.
Yeah.
Yeah, because at the end of the day, I thought that person was trying to go that route of because of my skin color. That's why they audited me so many times.
Sometimes, most of the time, it's randomly selected, or there's a red flag on your tax return. There is a figure. There's something there that triggered that audit.
Yes.
Yeah.
Okay. I have
If you try to avoid, let me put it this way: if you try to avoid it legally, you could get audited.
Okay. All right.
Okay. Let me ask you a question, Rev Solange. We know a lot of people that used to be married, filing jointly. When they get divorced, they file separately. Okay, what happens if both parents decide to claim, let's say they are not communicating, they are not speaking, they decide to claim the same dependence, like the children? What happens?
Yeah, you can do that. There's a law, there's not a law, there's an RS, something which called, there's a word for it, split, where both parents can actually claim one child.
No, but if they're not communicating, one of them may claim that child as if they are the only.
That is where I want to say, unless one parent claims as if they are the only claimant, then that becomes a little bit of issue. But if both of them agree, both of them can claim the child, there's a way that it gets figured out. That is joint custody, joint this and this. The other, both parents will indicate on their tax return that there's another parent claiming that child as well. And the IRS has a way of figuring that out for them. Okay. Or one parent, the custodian parent will claim the child in full, and the non-custodian parent, because they pay child support, the child visits them, that person could be head of household, but not claiming that dependent. You see, because the child spends a lot of time with them, maybe over 6 months, but they cannot claim the child in full. The mom or dad, who is the real custodian, claims that child. That's always a very sticky issue in tax preparation when parents are divorced, separated, and their children involved for tax purposes. But when one of them, they're not speaking to each other and all that, and custody was given to just one parent or joint custody, because that comes into the IRS will ask those questions. If it was given to one parent, then that one parent is one that's legally.
No, but what if the other parent is paying child support? What if the other person that doesn't have
child support does not? Child support does not really legally entitle you to claim a child on your tax report, because child support is not even tax deductible. Alimony is. That's another area. Tax topic is so wide that we could do 4 or 5 series sequence of these. I was talking about tax. When parents are divorced, there's child support, there's alimony. In some alimony is tax deductible and taxable. In most states, I always say most states, because some states, they have their own way of looking at things. Child support is not. I don't care if you paid 100,000 on child support. People ask me that all the time. Can I deduct?
I didn't know that.
No, it's not tax deductible. No.
Yeah, that leads me to wonder why you see some of these girls, they go from A, B, and C, and they have one child. I thought they were doing that to get all that child support so as to be able to file for the tax refunds and things like that.
No, they do. Okay, they can do that. No, they cannot, because that money they're getting is for them and the child. It's like free money. I won't call it free because it's typical of the child. They're not reporting. I can get $100,000 a year from 5 baby daddies, and I'm going to report it to the IRS. It's not tax deductible. No, it's not. So to me, I'm just getting that money. And that person that is paying me $100,000 a year cannot deduct that on their income taxes either.
Okay.
Because they feel that it's your responsibility to take care of your child.
Yes.
Yeah. So why do you want a tax break from it? But if it's alimony, because we know that you're not related to this woman or man you got married to, whatever money you're paying that person is tax deductible.
Okay.
Well, this is really breaking it down, because I mean, you would think that if alimony is tax deductible, palimony should be tax deductible, but that's what you're saying. It's not.
The child support is not.
Okay. Yes. Okay. Yeah, Reverend Pam, other comments or remarks before we begin to say our last words on this
Yeah,
topic?
so one last question for Rev Solange is, it doesn't matter, you know, this taxes, it doesn't matter how many taxes we do, there's one learn something new. So for those who are divorced, what advice would you give them is the best way to file their taxes?
Oh, when
Those
you're
who are-
divorced, unless you remarry, when you're divorced, the custodian parent with the children is head of household. The parent that doesn't have the child, they are single at that time, is single. And the person with the children is head of household. If the other person remarries, okay, they file marriage filing joint with their new spouses or whatever. And the woman or the man that has the children is considered head of household. If he or she remarries, then they are now filing joint with the children.
Okay, but all right, some couples think, let's say maybe one couple has 6-figure income and the other person does not, and they feel like it's better for them to file married by filing separately to save money by not putting them in the next tax bracket. What is your advice to those couples who think by combining their income, it would take them to a higher tax bracket?
Sometimes it does. Sometimes they decide. See, if you go to a tax accountant, what they do is we have what we call married filing joint versus married filing separately. We put the figures on our system. You give us your information, we put everything, we work it out, and we'll tell you if it's going to be beneficial for you to do it married filing separate or married filing joint. Both of them are very, very legal. So it's up to you to make that choice.
Okay, so it doesn't matter what the motivation behind it is, so long as
find out if it's beneficial that way, especially if you have children. As I said, both of you are going to lose out. If your income is not that high, you're going to lose out on an income tax credit, daycare credit, education credit, and you name it. So you have to really make sure you work both ways and make a choice, decide what way you want to do it.
Okay.
Now this is more for food for thought. I once had an adult student, female, who told me in confidence, I'm breaking that confidence, now she's no longer my student.
Don't mention her name.
Yeah, that she was working and her husband was the one doing the taxes. But she never had anything back from her husband, never even heard about how the taxes were done, if there was any refunds or so on. Is this not dishonesty? Should we not educate our people to learn to be honest with each other?
Let me tell you something, Nia-san, and to the public, whoever is watching. When you're doing married filing joint taxes, in order to submit that tax to Internal Revenue, both people, they have to sign that. There is a form, even if it's the electronic form for submission, both of them have to sign before the tax accountant or tax preparer will submit that tax return to Internal Revenue. So how was the form? How would they submit it when she was?
She probably signed without reading. A lot of our people just sign stuff without reading.
Maybe
especially the ladies. Especially the ladies, they don't read, so they just sign.
The devil is a liar. What do you mean by especially the ladies? I read everything. No, Nia, so.
No, not all ladies. Not all ladies read.
Don't say no. I disagree with you. Earlier, a few minutes ago, you said the ladies keep having babies with different men. What about the men having babies with different women? Stop attacking women.
They don't pay child support. The women don't pay.
Oh no, they do.
They do. Who told you that?
Yes,
sir. Women pay? I didn't know.
Oh, a lot. I know a lot of women that are paying child support to the men.
Oh, okay, no, I never knew.
It goes both ways. Oh, you never knew that? No.
Now you do.
Child support.
Okay, I thought it was only the men that pay.
No, women pay child support.
Okay.
They do.
All right. Please, I beg your pardon if I went too far. Okay.
You better beg the pardon. And May is coming. May is our month. You're going to see a lot of women on this show. So be careful.
That's right.
All right, you're forgiven.
Before I do the round of the table, there are two breaking news items here. The United States government has ordered all its non-essential staff to leave Chad as a result of rebels approaching the capital in N'Djamena from two directions. Britain has also issued the same instructions to its citizens in Chad. The rebel advance comes as early election results show President Idris Deby, the incumbent, on course to win to win a sixth term as president of that country. The story continues, but I will just leave it there. And the other breaking news story is from South Africa, where the government is announcing that a wildfire started early this morning on the slopes of the country's Table Mountain and has spread to the nearby University of Cape Town campus, forcing the evacuation of hundreds of students. The blaze spread quickly after breaking out early on Sunday morning near a memorial to politician Cicero Rhodes, a restaurant, and was also destroyed. And the university is saying that its library has also been burnt down. 4 helicopters are said to be fighting the fire. So those are the 2 breaking news items, one from Chad and one from South Africa. So now, Reverend Solange, I think at this point, you have your last word on the show.
Okay. Our listeners, our viewers out there, as we said, taxes are certain. You cannot evade paying taxes. Yes, you can avoid paying taxes, but be careful what you're trying to avoid, because you might, how do I put it? Unknowingly slide to the side of evading taxes. Look for a good tax professional to prepare your taxes. Don't try to do it yourself unless you know exactly what you're doing. And do not hesitate to ask for advice. Google www.irs.gov or taxshop.org. Thank you.
Thank you so much, Reverend Solange, and it was a pleasure, as always, having you on the show. Our chair, Reverend Palm, your last word.
Well, I just want to thank Reverend Solange again, and not just for all she does to help our people, but for volunteering as our CFO, Chief Financial Officer. We have the best, only the best is good enough for us. And thank all our listeners. Again, her business is called Tax Shop. The phone number there is 281-556-0002. That number has not changed since the days of John the Baptist. She's located inside Houston.
For 28 years.
Yes, and she's licensed in all 50 states. So we really want to thank her for all her labor of love for this organization and many others. And every time we learn stuff, I just learned that I should have, I don't know if it's too late for me to contact FEMA to get a quote for my house being damaged by Hurricane Harvey, but we learn something every time we do this. Niason, over to you.
Thank you very much, Reverend Palm, Reverend Solange, Reverend Sylvia left, sorry again, and that is me. Thank you all so much, and let's go away knowing that we can see or follow or listen to this discussion on YouTube, Africa Online Media Corporation on YouTube. You'll be able to get the information that you missed, and you can help yourself by listening to it. Thank you all so very much, and have a great week, and see you next week. Bye for now.
Bye.